Wow. All right, so we are live for midday RTD Q&A. Excited to have back returning guest, one of my favorites, Mr. Lior Gantz from Wealth Research Group. He's an analyst, commentator, you name it, investor, and so happy to have you back, Lior. How are you doing, my friend?
Doing very well with everything that's going on.
Yes, man. So I think the last time we spoke was at the beginning of the lockdown phase, and so now a good portion of the country / the globe is reopening or attempting to reopen, but yet the recovery process or whatever it's called is not doing so well. So just out of today, the numbers from the GDP for the U.S. From plunged 32.9% or something like that, and the unemployment's up again. And so, yeah, but give us a rundown, man. What are your thoughts on this recovery or this reopening, or how is that playing out, man?
Well, for one thing, it's playing out differently in different regions of the world.
Yeah.
So the United States is actually not leading the pack in terms of the recovery. The recovery is much faster in other parts of the world.
Yeah.
Either because they're more politically united, and you'll probably be surprised to hear this, Mike, but Europe is looking much better politically Union than the United States. The United States is really, because of the elections, they're really divided. Everything is politicized. Masks, yes or no. It's not even a health issue anymore. It's a Democrats versus Republican. If you look at the surveys of who wears a mask, Democrats wear more masks, and it's more political. It's amazing. Male and female, etc. So what we have in terms of the recovery is Europe is starting to look much better than the United States for the first time in about a decade or even more. And therefore you see a lot of investors, and I'm talking about the wealthy, pension funds, hedge funds, etc. They're moving funds over to Europe. You move funds over to Europe, obviously there's more demand for the euro. The euro looks better than the dollar, and the dollar is at the 20-month low right now. If you're asking yourself, well, what's going on, right, with gold and silver, etc. Gold, if you look at gold's chart, it's been moving in tandem with the dollar for 3 or 4 years. So gold bottom in December 15, 2015, it rallied with the dollar. There was dollar strength compared to other fiat currencies, but there was gold strength compared to the dollar. And so they rallied in tandem. A dollar weakness was not portrayed by a move in gold. Gold was just strong. Silver, though, was disappointing. So for years, right? So now you see that the dollar is really weak because silver is up more than 100% since the March lows. That's the real sign that we have a paradigm shift in terms of the dollar. The dollar now is looked at not in the context of it peaked. I believe that's what we talked about in our last interview. That I said, look, the dollar is peaked in terms of its safe haven status because the March lows brought all of the world into dollars. All of the world. That's what brought the system down, basically, and the Fed had to do the emergency intervention because there was about $30 trillion that went into the dollar, and the system just cannot handle that type of withdrawals from stocks and from bonds. And so that was the peak. From there, the dollar started to weaken, and now we're at the 20-month low. The euro is looking better. Nobody trusts the Chinese currency, so and that will not change for a long time. So it's not like the dollar is getting moved to yuan, and when people that are saying that China is going to get their reserve currency, not going to happen. But something that might happen is 2 blocks. So one block would be the US dollar block and all the countries that are loyal to the United States. And there will be another block for Russia, Brazil, India, China, etc., the BRIC countries that will use some sort of a basket of other currencies. So the dollar is definitely under pressure here. In terms of recovery, this is not a regular recession. So because it was not brought about by bad behavior of CEOs and etc. It was brought about because the government's told the free markets shut down. So there's going to be issues. Now that you think about what happened in March and April, you're almost amazed that that's what governments did, and the people did not. They responded. They just went on with it. So the real economy, in other words, what we call in the Main Street or small businesses, which employ 55% of American employees, that's who's really hurting. There's two reasons for that. One, they do not have access to bailouts and to the bonds market like Fortune 500 companies do. So you can't just issue more stock and you run a laundromat or a restaurant. It's not like you can. It's a small business. It's much less liquid. It's not like people are knocking at your door and saying, "Hey, can I give you a loan at 1% here and get your restaurant going?" Yeah. So small businesses are much more exposed to what's happening right now, while the Fortune 500 companies, the big companies, etc., that are much more leveraged to credit markets, are seeing that the government is basically telling them, "We do not want you out of business. Yeah. We do not want you to fire people. We want you to run as if nothing has happened, and therefore, here's stimulus money. We will come into the Russell 5000, which means the junk bonds, and we will buy everything. We will get you through this." So when you have the largest institution on the planet, the Washington, the Treasury Department, along with the biggest central banks, the Federal Reserve, telling you, "We will not let this thing go down, no matter what." So this is playing a major role. In a recession, you see a credit contraction. Here, you see a credit expansion. Yeah. So basically, what's happening? There's all this money, and it's looking for places to go, and that's why the stock market has already recovered, and then some. In some cases, and that's why you're not seeing foreclosures from left and right from the real estate industry, but you will start seeing once the small payments, the payment protection program, etc. Once those fizzle out, if they fizzle out, you'll see more issues. What I think in general is that this is going to be a very deep recession. In other words, it will take us about 3 to 4 years to go back to February of 2020 in terms of employment, markets, but employment, full employment, etc., where the average person feels confident in the economy and all that. In terms of the markets, they're going to be back at the all-time highs, within weeks, maybe a month or two. Not more. The S&P 500 and NASDAQ, they're going much higher. There's all the incentive in the world for them to be worth much more.
Yeah. Okay. So we had a little disconnect right there. But one thing you mentioned earlier,
I saw you shocked for like 5 seconds. So
yeah. One thing I want to go back on, as always, for those that tuning in, streaming live with Lior Gantz from Wealth Research Group. And so you hinted at earlier or something that caught my attention. You said 2 blocks, a Western Hemisphere and the Eastern Hemisphere, currency, baskets, and whatnot. And so do you think that's something that is already in the works? It's a matter of being rolled out, because we're hearing about SWIFT bank and the Chinese telling them get ready to use the SIP as opposed to SWIFT. So is all that ready to be rolled out? And this is a part of the plan?
I don't know about that. With regards to all of these major changes, you'd think that there's so much brains behind them, right? You would think, man, before the Bretton Woods Agreement, which pegged the dollar to gold at 35 to 1, they probably had this thing ready for 15 years or something in the drawer. Usually not.
Yeah.
Usually not. If you go and look at the actual archives of how Nixon took the dollar off the gold standard, the most important monetary decision of the 20th century, it literally happened because they were forced into it. There was no program. There was no think tank that came to Nixon and advised him that. It was a time when Charles de Gaulle, the president of France, was like, "There's no way that they have so much gold. There's no way it's a 35 to 1 conversion. I want an audit." So he started talking about that in 1968. Europe at that time was very much out of the World War II mentality, so they were getting stronger. They were getting more, back to normal historical means in terms of like gold, etc. They were able in 1968 to challenge the United States and say, "Hey, we can be the reserve currency." So obviously the United States didn't want that. How do you avoid this clash? Well, you make gold irrelevant. How do you make gold irrelevant? So that happened when Henry Kissinger, basically the leech on Nixon's face. Nothing Nixon ever did was without Kissinger. So he told him, we have to dismantle Europe. The only way we do that is we take gold off the picture here. So that's how that happened. 1944 happened in sort of the same way. They attribute Keynes with it, but it was Keynes, the British, and an American economist, and they brainstormed and came up with the Bretton Woods Agreement. So look, these things usually happen because there's a crisis, and not because wiser heads prevail, or whatever the phrase is. It's not that this is going to happen on a bright sunny day. This is going to happen when there's going to be another March type environment, and a couple of the world's most important prime ministers will say, hey, before we reflate the whole thing again, before we dump an additional $20 trillion, I want to discuss this world order. Yeah. And that's when the crisis happens. That's how it will play down. Somebody will have enough leverage on the United States, which clearly no one has right now, although we all think that it's the dollar is weak, etc. Obviously, there is no other solution. So a bad marriage is better than an awful divorce at this point. So the world is just agreeing to what Federal Reserve is doing, what Washington is doing. But I think in the next 4 to 5 years, the United States is going to be surpassed by China in terms of GDP. Will be the world's largest GDP in terms of their economy. They will have much more countries on their back, and then I believe that this can happen. Yeah, 2 blocks, because nobody trusts the Chinese currency. Either 2 blocks or some sort of a rearrangement where the United States is not able to just do what it wants.
Yeah. Now, I want to get your thoughts on gold and silver. And so we've witnessed a all-time new high in gold in the Federal Reserve note for the first time since 2011. So that's telling us something. And so it looks like gold and silver is the preferred currency that people want to hold on to. And over here in the U.S., I guess some supply issues. The U.S. Mint is mentioning about they may have to choose which one they can mint in up to 12, 18 months from now. And so it's so much concern on being able to actually get your hands on metals. What are your thoughts on that? Will that play into a continue price rise throughout the rest of this year and beyond, or what?
Right now, gold is looking amazing. In terms of the demand for it, the sentiment is not too euphoric. So many people are saying this is the end of the bull market. Gold has doubled since late 2015. In other words, there's no euphoria. Even with silver, there's no euphoria. And so I think this is a real bull market. I don't think it's exhausted at all. It may suffer a correction in the next few days, weeks after this interview, because it rallied so fast. But in terms of the fundamentals that are driving this, there's so much upside to go. In terms of gold alone, there's no gold bull market that has ever ended in the type of returns that we're seeing right now from gold. There's always been much more than a 100% gain for gold since the bottom. And with silver, I mean, it's not even 100% as we are right now. There's there's so much more people that think they're late, they're not late. And for the most part, here's the real big issue here. The dollar has been on a 9-year bull market. The bull market has ended. That's it. We are beginning a dollar bear market. If it lasts like all previous dollar bear markets, then we're looking at something in the order of 4 to 5 years. We're really in the early innings. What people, where this is problematic for many, is they say, okay, well, the gold bull market is already 5 years old. And what is surprising here is that the dollar has been on a bull market along with gold for the past 5 years. And now we have a situation where for the first time, gold is in a bull market and the dollar is in a bear market. So we have many more years to go. This is a special bull market for gold. Actually, if you go to wealthresearch.com/gold playbook, This is the most comprehensive gold manual online on investing in gold. Since June of 2019, we have covered 9 companies in the gold sector, and they've all gone up in 1 year over 100%. If you go to wealthresearchgroup.com/4W, so 4 winners, basically 4W and /5W, the number 5 and W, you can look at 9 companies, and these 9 companies are not the exception. The gold bull market is on, the silver bull market is on, the mining sector is looking amazing, and there's so much more to go. The Federal Reserve's balance sheet is going to double from here, double. You're looking at unprecedented stimulus, which can never be taken back. Like they say, they can't ever take the throttle back from what they're doing. The end of this is a restructure of the debt cycle of everything. Whatever happens after this, when the next big crisis comes, no matter why it happens, there will be a change in the monetary system. This is the time to make sure you have precious metals. There's no debating that fact. I'm not sure if you're even here, Mike.
All right. Hey there, man. Yeah, I apologize, man. Apart from the internet, StreamYard, I don't know, man, but we'll keep it moving, man. I know you got a busy schedule, but forgot what we left off on. Talking about the metals, of course. So let me. So as always, for those that are watching, feel free to ask any questions. Definitely, I don't want to hog the mic and just ask all the questions myself, but. With that being the case, getting able to get your hands on physical metals is not the easiest as far as getting what you would like to be able to get. Silver Eagles will become extremely rare, it looks like, and the premiums on top of that. You know, give us your thoughts on how silver prices or whatnot might play out for the rest of this year.
So, for one thing, there's a physical back trust by spot, both for gold and for silver. Mm-hmm. And you can even take delivery at in some instances. So you can do that as well. They trade at a premium to the spot price, and for a reason. They're a 100% backed physical trust. So that's Fizz is for gold. Mm-hmm. So and then there's PSLV for silver. That's by Sprott. Now, you can also go to a bullion dealer. Personally, I use a company called milesfranklin.com. The founder is Andy Sheckman, and you can speak with him. You can even email him at Andy at
milesfranklin.com. Yeah,
and he will answer you personally. Literally, the guy in the business for 30 years still takes personal time to engage with each and every client.
Yeah,
and so. Those are the easiest 2 ways. There's other bullion dealers that are the biggest in America. And, you should look at them. They will have obviously more buying power for their clients than the small ones. Mm-hmm. So that's one thing, right? That's the physical angle of it. The physical angle of it is I have savings. I have savings in cash. I just want to convert these cash savings into physical gold and silver. That's one sort of investment that, or I don't even want to call it one sort of savings vehicle mm-hmm. that you should look at. Now, and that's one thing that people will look at for sure. And by the way, for us to go into the second phase of this bull market, mm-hmm. silver and gold have to trade at a ratio of 65-1 below. Mm-hmm. So let me say again, in December 15th, 2015, the bottom for the gold and silver markets after the 2011 4-year crash, silver and gold traded at 65-1. For this bull market to be labeled mature, you have to assume that silver will be lower than 65-1. Currently, it's about 90-1. Mm-hmm. So we have such a long time in this bull market. for both gold and silver. So that's one thing. Therefore, if you don't own it today, that's don't rush right now and pay a crazy premium. Just continue to look at the premiums on a daily basis and then figure out what you want. The other thing about it is to understand that right now, because we're in a bull market, if you're looking for capital gains, not for savings power. In other words, you're not looking to just take a cash hoard and convert it into physical metal, but you're looking to take a portion of the technology sector that you had until now in your portfolio, or whatever was high flying, and you think that that's going to peak here, and you want to convert that into the commodity sector. That's where the mining stocks come in. And my God, Mike, what we've seen the last few months, it's been amazing.
Yeah.
We've covered one company that went from 28 cents to over $3 just this year.
Yeah.
So, I mean, the leverage is there. There's two forms of leverage. If you're an operational miner, there's the profit margin leverage. Your costs are basically going to stay the same throughout this bull market, unless oil prices start to go higher, and then your commodity prices go up. So you're just making more money selling the thing. It's a thing, and it's a bull market. The second thing is asset leverage, and that's even more exciting. The reason is you have these resources in the ground, you have these reserves, they're proven reserves, you just need to extract them and create a mine out of them. Now, if the price of the underlying commodity goes up, the price of that land, which surely has economical reserve in there, it goes up in leverage stock. So those companies are next, because right now the miners have moved first, and now the people are seeing that this is a bull market. The CEOs of big companies are going to start, merging with mid-tiers and putting hundreds of millions to work to create new mines in the cycle. This is exactly what you want to see. And man, we're going to cover so much of this action. We're going to continue covering so much of this action at our newsletter.
Yeah, good deal, man. Now, along with that, I'll be bad if I didn't admit about or talk about what it looks like the banking sector is doing. And so, just as of last week, they talked about cryptocurrencies, and so it looks like they're the adoption side of things, and actual commercial banks looking to hold cryptocurrencies for people, for their depositors, is something that's going to be rolled out pretty soon. So the digital transition is well underway. It's going to be a part of our future economy, whether we like it or not. Give us your thoughts on that. Bitcoin just did a little bit as well, and Ethereum has some exciting things come out as well. Is that something also that shows a lot of promise from what you see?
So what you see in the last 3 months is Robinhood, an app that is designed for millennials or for youngers, and not for the baby boomers.
Yeah,
you've seen exploding. Now, what is that? What's happening right now is that you have this entire generation that did not invest in stocks at all. People that are between the ages of 36 and 20 that are not invest in the stock market and are now entering the stock market for the first time. Now, remember, these are the same people that love cryptocurrencies because they fueled the cryptocurrency mania 3 years back. So obviously, there's a demand for these types of services. The banks are going to offer to help with this demand. There's a demand for storing cryptocurrencies, for trading cryptocurrencies, and all of these brokerages and banks are aware of it. And what they want is to capture the millennials. They need. That's the future of America in terms of opening new accounts. This generation hasn't bought homes, so every bank wants you to come in, open an account, we'll store your crypto, but then we'll also give you a mortgage. So that's why it's almost like a clickbait. They're trying to get you for the crypto, but once you're in there, are you and your new wife here gonna move from the city to the suburbs? What are you gonna do in terms of mortgages? Let me show you. Blah blah blah. This is what's gonna happen. It's an entire generation, mostly college grads, that have not been buying homes.
Yeah.
So this is what's really behind this. And yeah, look, obviously, Bitcoin is 95% of the crypto world. So we're mostly talking about Bitcoin here and what its future is. But digital currencies in China, there is no cash. It's just digital currency. It's not cryptocurrencies, but it's just that's the way the world is moving. And it's a trend that's not reversible.
Yeah. So we have a question here from Richard. Says, what about gold royalty stocks? What are your thoughts on those?
Yeah. So definitely, actually, if you go to wealthresearchgroup.com/4W, the four companies that we profiled in 2019, June, two of them are royalty companies. In my experience, since 2008, beginning when I first started investing in gold and silver royalty companies are the best companies to own in the sector, bar none, in terms of the risk reward and the anti-cyclicality. So if you look, for example, at companies in that report, and you look at a 10-year chart of them or a 12-year chart of them, you see that they don't move with gold and silver. They're all, because they're built not as a mining company, they're built as a royalty company, which is a far superior business model. Mm-hmm. So there's the three that are like the kings of the royalty sector, and then there are smaller ones. The smaller ones obviously will have amazing returns, but more than amazing returns. Richard, what I think is interesting with them is, one, most of them pay a dividend, which most mining companies don't, and two, they offer much better risk, downside risk. So if a part of your portfolio is, or part of your gut is that I don't want to undergo any 30 or 40% correction, I don't care how hot the sector is, I'm not going to open my account and look at a 30 or 40% decline. Mm-hmm. Then royalty companies usually do not do that. If you look even at the worst part of the bear market for the precious metals between 2011 and 2015, they did not undergo that type of environment. They're much less correlated with the underlying commodity, personally.
Yeah, sounds good. And so also, I think part of that question was, why can't boomers use Robinhood? So I think you referenced earlier, most boomers do not use it.
they can obviously use it. They can use it, and not only can they use it, but Robinhood is much faster to open than like a Schwab or Fidelity. It takes like 2-3 days. Robinhood, you open it like in 10 minutes. That's the hard. They can use it, but you have an entire generation that grew up on Schwab and Fidelity and Scott Trade. You're not gonna take a 65-year-old and move him to Robinhood. It's just not gonna. It's not the type of person that does that.
Yeah.
Plus, Robinhood collects data on their users and then sells that to hedge funds. So that's another thing that you need to be aware of. For example, if they see a crowded trade, they give that data to market makers, and then they short those companies, etc. So obviously, there's good and bad to the fact that Robinhood is free.
Interesting. So as we get towards the end of this year, we have just today the President Trump, mentioned about delaying the elections, and of course, all bets are off if we get to that point. So one of my concerns is that between now and then, that's roughly 100 days or so, we're going to have some issues that might disrupt all these plans that what we've been talking about. And so, in your opinion, how would that, if it came to fruition, really disrupt the world's economy entirely, and confidence in the dollar and everything in between?
My opinion is that in February, Trump felt so good about what he's accomplished. Mm-hmm. Whether or not, you are a Trump supporter or not, mm-hmm. He felt personally as, I set out to do something, nobody thought I would be president, including myself, right? Mm-hmm. Because I'm talking Trump.
Yeah.
Trump didn't have a victory speech. Mm-hmm. He thought he was losing, even at the day of the election. So here you have this guy, everyone said, no way, and he becomes president. Not only does he become president, he goes and does things that are amazing in terms of not amazing positive, but just amazing in terms of their scope. Mm-hmm. He tackled like the biggest issues. And so in February, it was basically a shoo-in that he would get another win, mm-hmm. And stay for. And then coronavirus happened. Now, here's the thing about coronavirus. For a person like Trump, with the psychological build that he's designed with, that is something that he did not plan for. He did not want. He feels like it's not part of his legacy. In my opinion, the day that became like the issue of the candidacy, he, in his mind, he said, look, I don't want to be remembered for coronavirus. I want to be remembered for everything up to coronavirus. Therefore, I personally, meaning Donald Trump, I do not calculate whatever happens from now as part of my legacy, or because it's a downer. It's a downer. It's a crisis. I don't want to deal with a crisis. I gave you the best economy ever, the best the best unemployment. I don't want to deal with this right now. And that's what I think happened to him personally. At some point, he regained, you can see it in his speeches and his tone of voice and everything. He was just not into it anymore. In sort of a childish way, right? You're the president. It doesn't matter. But he was like, I want to win. I was winning, and now, this thing came on me. He even said that like privately in the White House. He was like, why is this happening to me? Okay, so, but then, his will to win is he's a winner. That's what he is. The guy's he's a shark, right?
Yeah.
So at some point he says, look, I don't care. I need to win. And I think the fact that the polls are against him right now is incentivizing him to win at all costs. He just wants to win now.
Yeah.
And so he doesn't care if he writes stuff on Twitter that, there's a line between I want to win the next presidency and I want to win this presidency, and then in doing so break the country. There's a line between these.
Yeah.
And so I think this elections, these lines are going to get broken. This is going to be the most violent in terms of words elections ever. Both sides just despise each other.
Right.
Literally, it's something that we've never seen, and I think they will not respect any rules of the game. And look, it's like a vicious cycle. Trump doesn't believe that the media and Biden are going to play fair, and Biden and the globalists don't think that Trump will play fair. And so this is what's going to happen. It's going to be unfair, even more than what we saw with Hillary.
Yeah.
So that's what I think is going to happen, and that's why, in my opinion, there's so much more upside for precious metals. There's just so much more drama coming.
Yeah, I would agree. And so we got a couple more questions. I'll let you go. I know you got to run.
Sure.
So John says, would you recommend moving 75% of my portfolio to the Eastman Kodak company for a safe haven asset?
I hope he's joking. But
I think so.
Okay.
Oh man, but no, as always, Lior, we're approaching our 30-minute mark, man. I appreciate you hanging out with us, and definitely, I think this presidential situation we're about to witness will be a game changer all the way around, man. And so, whether the left or right takes the House, I think it's going to be chaos in the streets regardless. So, I'm assuming you're seeing I'm sure you're seeing what we're experiencing over here already, based upon all the agendas of Black Lives Matter, Antifa, all that stuff that's scheduled for this season. So,
Mike, if I may just answer this person's question.
Yeah.
So I do not feel like the markets are in a bubble. About the traditional markets, the S&P 500 and Nasdaq. Okay. Contrary to what many gold bugs feel is a bubble, I don't. I we're in what's called a secular bull market. That's in 2011 or 2009. No matter which way, this thing has 5 to 10 years more to go. And so I don't feel like this is the time to be just in cash or just in metals. I am very much invested in the stock market, and the gains have been phenomenal. If you go to wealthresearchgroup.com/list and /list2, these were 2 special reports, one issued in April and one issued in May, that we said, here are companies that are the best companies on the planet, part of the S&P 500 and part of the aristocrats group within the S&P 500. Here are limit orders that I personally use, and look at them. Look at them as a reference, as a point of reference, and then do your own research. Think what you want to do. Yeah. Every company that reached its limit order, meaning it went down until the price that I felt comfortable in buying it, in about 25 out of 34 cases, that was the actual bottom. So we're going to issue another one that's going to be called /list 3 that we're working on right now. But do not confuse the fact that, yes, record stimulus is what is bringing all of this back so quickly. That's one thing. So the markets are coming back quickly. That's one thing. But they're not overvalued in terms of, if you look at a forward PE ratio for 2-3 years ahead. Especially, they're very much, they're rich, they're expensive. Compared to interest rates where they are today, they're not. If the 10-year treasury bond is yielding in real terms, so yield minus inflation, minus 1%, the safe haven bond of the world is yielding minus 1%. Pension funds, the sovereign wealth funds, the boomers, they have no alternative but to go back into the stock market. And there are some companies growing at 8 to 12% a year. So why not?
Yeah, that does make sense, my man. Well, as always, Lior Gantz, it's been great connecting with you. Definitely looking forward to having you back on as we get closer towards the end of this year, and we'll have another way of looking at things at that point. But as always, for those that have watched, if you enjoyed the back and forth, make sure you go check out those things mentioned by Mr. Lior Gantz here. And other than that, Lior, enjoy the rest of your day, man, and stay active, keep doing what you're doing, and definitely it's good to connect with you.
Thank you very much, Mike.
All right, see you guys later. Peace.